Hey there, heading into 2021, everyone is wondering what to do with their investment portfolio. Today, we have a financial advisor who's going to talk to us about diversifying into alternative investments, in particular commercial real estate. My guest, Mike Brown, is on the show coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real world strategies focused on creating long term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome back for another show of the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Michael Brown. He is a financial advisor, co-founder of Red Fox Capital and Red Fox Wealth, as well as the author of The Real Perspective, Secret Investments Your Financial Advisor Won't Tell You. Mike, thank you so much for joining us on the show, and how you doing, my friend?
Hey, Dwayne, thanks for having me. I appreciate it.
Yeah, really looking forward to it. Occasionally we have, financial advisors join us on the show. We love getting kind of a well-rounded education as far as kind of what we should be doing as far as real estate, the markets, so we can be kind of really informed so we can be able to take action. I understand that you're kind of a different type of financial advisor where you kind of talk about alternative investments a lot, which is like a lot of big thing for our listeners to kind of learn more about. Before we get deeply into those type of topics, would you mind kind of talking about your background and how you got started and kind of what your focus is on?
Yeah, absolutely. So, I've been in the commercial real estate space for about 20 years, from not only from a brokerage standpoint, but also ground up development and investment side. We have then morphed into more of a wealth management side also to provide alternative investing to our clients, helping them really understand the word diversification, which sometimes is a misnomer in the traditional financial service industry, that you need to diversify outside of Wall Street. So we set up a company to provide those services to our clients and investors. And we've been going strong now for about 20 years.
Awesome. So why do you think financial advisors ignore commercial real estate as an alternative investment that they suggest to clients?
Well, I think it's a couple things. I think number one, my background, I came from a large institution like Merrill Lynch. So we were prohibited to discuss outside investments that were not part of the umbrella of services they provided. So that was number one. We weren't allowed to talk about it. And I think number two are that financial advisors really don't understand the asset class itself. The typical go-to answer, if a client comes to them and says, I want to be in real estate, exposed to real estate, the go-to answer is invest in a REIT stock, a real estate investment stock will get you exposed. But the problem is those real estate investment trust stocks correlate directly with Wall Street. So what we're trying to do is get you to uncorrelated investments to help you diversify out your portfolio.
Yeah, I could definitely see it now because a lot of the people I'm talking to and we're kind of concerned of seeing heading towards 2021 where everything's going to be moving around with the market right now. It seems very positive, but as we know, as far as kind of cycles and things like that, and people kind of want to know what's some alternatives, especially if they're heading towards retirement or have some type of large goals that they have in mind. Can you kind of talk about your approach with working with clients as far as kind of like step one, they come in and kind of have a discussion with you to kind of figure
Yeah.
out which path they should be taking?
Right. I think you laid it out perfectly. If number one is to get to know the client and find out what their goals are, because everybody's different. What is your suitability for these type of investments? We like everyone to take a risk analysis, so we find out what's their risk tolerance. I mean, do they want to be in a go for some big returns with risk, or play it very safe in the retirement age? So we got to really get an understanding, a deep dive of the client, what their goals are, and their suitability. And once we do that, we try to take a look at their holdings, investment portfolio, and try to put it into buckets. Let's find out what they have in Wall Street exposure, what they have, maybe in real estate alternative type investment buckets. What do they have in cash or safe, what we call insurance type buckets? And then try to figure out how to allocate those three buckets to maximize their returns, but also look for their downside, because one of the main things we don't want to do is lose any money. So it takes too long to claw back. So what we try to do is allocate those correctly and provide a true ascension for the client to hit their goals.
And as far as kind of like taking to the next step, so if, we say, okay, this is the plan, this is what we want to do, and we want to kind of invest into some commercial real estate. Can you kind of talk about some tips that you talk to your clients regarding due diligence, so we make sure that we at least have a more educated knowledge before we jump into it? Of course, every investment has its risk, but we want to kind of minimize it by just kind of giving as much education as possible.
I think, education is important. Understand what you're getting yourself into, but more importantly, understand who you're working with. Who's the sponsor of the deal, who has done the due diligence on the deal. Get to know that person. Ask them the appropriate questions. I have a chapter in my book you mentioned earlier that talks about completely in due diligence. Go through those steps, and don't be aware of red flags, which could be very high returns. There really is no such thing as that. Find nice preferred returns about 8-9%. Anything goes above 20, I'd say are red flags. 20%. So Google them, look up their website, try to find out who they are, ask them appropriate questions, and go in with your eyes wide open.
Absolutely. And are there any type of asset classes that you're more bullish on, that you kind of like, that you kind of mention to your clients to say, hey, do some research on this? I think seeing kind of the metrics, this is something that it may be interesting in your particular situation.
We're bullish on right now small retail strip centers. We're seeing the effect of COVID with some of the smaller tenants, but we see that probably in about 3 to 4 months, those are worked through the process. The weaker tenants have left, but there are also some good solid tenants that need help, that I think the landlord and the investor could help. But we see a really strong valuation and a lot of blue sky in the small retail centers. I'm not talking about the big anchored grocery centers, but more the regional small centers. We've also been very bullish on Dollar General stores. We've been purchasing some of those for our portfolio. They're strong cash cows, putting out a lot of very solid cash flows, and they're also appreciating in the same time.
Absolutely. And as far as kind of you had mentioned before, I had mentioned in the intro regarding Red Fox Capital. That's where kind of like your other investment arm. Can you kind of talk about your other businesses and that you ought to be able to kind of support your clients with?
So Red Fox Capital is dedicated to the commercial real estate investment funds. So that particular company, I have a partner who runs that day to day. And so we are constantly looking to put together either funds or actually one-off investment properties. So we typically will, find those investment opportunities, reach out to our investor clients first and see if they have any interest. Typically, investments into those portfolios could be, anywhere in the low end, about $100,000. We have the discretion to lower that if need be. So we do that. And depending on the actual investment, you could do cash it just a dividend check. We would just send you a dividend check every quarter. And then with a large windfall at the end, we sell the asset or the portfolio. Then we have some more aggressive opportunities where we're doing construction, doing development, where you don't have that quarterly dividend, but you got a lot more upside at the end of the project. So we have a mix of things always working. So, if anybody's interested or we're talking to people, we'll collect your names and put you on the list for when new projects come up.
And as far as kind of like you having the fund structure and then the direct structure to invest, that's just kind of giving the client kind of an option of, being able to have a, diversification in different asset classes or different investments compared to kind of like, here's the actual investment, are you interested, based off all the metrics here?
Yeah. Usually the funds don't mix asset classes.
Okay.
They'll be in one particular class. But with more properties in that fund, it also will lower your risk profile.
Hmm.
So, we try to do that in most cases, but there's still good one-off type property deals that are more like traditional syndication, where we run all the day to day and provide the investor kind of a passive perspective on commercial real estate, but directly invested.
Mm. And then you had mentioned earlier regarding your book, The Real Perspective. Can you kind of run us down kind of what else we can learn from that? And then also, is it available for purchase?
Yeah. So it's on Amazon, but if you email me, I can give all your listeners a free digital copy. We talk about that later, but so basically it's a walkthrough of kind of my journey into real estate and
Mm.
how we take a traditional Wall Street portfolio and then implement commercial real estate into that portfolio. We don't think you should leave Wall Street altogether. We just think you need to allocate. So we show you how to do that, the ups and downs, both perspectives of it. And we can really see a 3 to 5 times return on a traditional Wall Street portfolio by adding private commercial real estate. So we lay that out in numbers with real historical data and kind of give you a soup to nuts perspective on not only commercial real estate investing, but also how to implement it into your traditional Wall Street portfolios.
Awesome. Yeah, thanks for sharing that. And I kind of
Yeah.
learn a little bit more about you. I know we kind of talked a little bit before we started recording. You kind of take us through a typical work day for you, and do you in particular have any special morning routines?
Yeah. Well, every day is a little bit different. That's why we like this business we're in. We all do try to get up early as possible. I used to do the miracle morning routines at 4 or 5 o'clock. I've kind of whittled that back to maybe 6. That's when you get your heavy thinking loads done out of the way. We typically, with my partner, we do a conference call about 8:30 every morning and go through the deals structure, anything that needs to be addressed throughout the day. So that's written in stone at 8:30. Then we start, working with clients, sourcing deals throughout the day, and wrap it up whenever we can. But in real estate and the world that we live in, if something comes up, there's some deals to look at, or an investor needs to speak after hours, you just make it happen.
Absolutely. And as far as I know, you mentioned, you with your partner, you guys just pick up the phone. Is there any other tools or resources that you guys use to make you guys more productive or communicate better?
We're unfortunately pretty low tech. We obviously
Sometimes the
use a
best way, right?
yeah, yeah. We have our CRM tools, and we do online webinars with technology, and we're doing obviously the Zoom calls now with clients because of the COVID issues. But other than that, I mean, we have proprietary pro forma and financial analysis systems that we built over the years. So we don't really subscribe to any particular software products other than more, communication tools with clients. So we try to keep it old school. I still say a notepad, a legal pad, and a calculator and a pencil are still my best tools.
Can't argue with that. Absolutely. And what can you say that you're most grateful for?
Well, I think we have to be grateful for a lot of things. I mean, our health, number one, especially in this crazy time. But our friends and family that as entrepreneurs, it's a tough road out there. So having a nice support group is always good. And just grateful that we live in the country we do, where there are opportunities. I still believe in the American dream, and as long as everyone is moving toward that, it can only better everybody else.
Absolutely, absolutely. And finally, we'll make sure to have all of your information in the show notes, blast it out
Yeah,
so all of our listeners can get in touch with you. But how do we get in touch if you can share that online for us?
yeah. You can email me directly at mike@redfoxwealth.com. You can check out our websites at redfoxcapital.co or redfoxwealth.com. And we have a lot of free downloads, a lot of information. You can join our list, look for deals coming up. And if you have any general questions or would like to talk, we're more than happy to talk with your listeners.
Awesome. Mike, it was a pleasure having you on. Thank you so much,
Okay, Dwayne.
especially at the top of the year. All the best to you and the family and continued success. And we look forward to connecting with you again soon.
All right, man. I thank you so much.
All right. Take care, my friend.
Bye-bye.
Bye-bye. Hey there, this is Dwaine Clarke, your host of the Wealth Through Real Estate Investing Show. I want to thank you again for tuning in and hope you're enjoying this valuable content. While I got you for a quick minute, I wanted to send you an invitation to join our growing investor community. It's called the Passive Investors Club. It's a group of like-minded individuals like you who are seeking financial freedom and to build true wealth through passive investing in commercial real estate. We take a totally different approach to investing that is opposite, that is pushed by the financial advisors and what we see in the mainstream media. We like to invest in real assets that we can touch and understand and that are not subject to the wild swings of the financial markets. We don't want to be part of the herd who pursues the traditional route, leaving our financial future to Wall Street. So if you're interested in joining our group and to sharing resources and opportunities, then go to passiveinvestorsclub.com/join. Joining the club is completely free and there's no obligation. And all our members receive our free Passive Investors course along with tons of resources and content. So again, passiveinvestorsclub.com/join.